Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been a mixed bag of everything. There's certainly a lot of tricky price action and a lot of interesting news, mostly negative, in my opinion, because basically Trump presidency and ongoing geopolitical instability it's affecting the market. The overall sentiment leans a little bit negative due to considerable uncertainty surrounding a Trump administration, while also some economic data came unexpectedly low, showing signs of inflation concerns and also the economy lagging behind. For example, inflation remains a concern, and also the Federal Reserve's recent comments about the economy, as you can see here from Goldsby, basically says that confidence in disinflation and a strong labor market is there, suggesting further rate cuts, but the pace of those rates might be slower than anticipated because the potential return of a Trump administration introduces significant uncertainty into the Fed's decision making process. The absence of commentary from Jerome Powell himself during this period adds to the ambiguity. This uncertainty is further complicated by the potential impact of Trump's proposed policies that may impact even Jerome Powell. So certainly the Fed has a lot of things to think about, and the market knows that. Building permits came a little bit different than expected. Then we got the MBA 30-year mortgage pushing higher. Here, as you can see, 6.9. And finally, Thursday, initial jobless claims, a little bit of surprise, but not a lot. But the Friday's final numbers on composite services, look at services, 57 instead of the 55. This is showing inflation, guys. And also, something really important, consumer expectations here show 2.6 coming from 2.7. That's good. But look at the 5-year inflation. What people are thinking about this. Basically, we are pushing from 3 to 3.2. Inflation remains a key concern. Although the University of Michigan's 1-year inflation expectations fell, the 5-year expectations rose to 3.2, indicating inflationary pressures. But it's not only in US. This is further supported by international data with positive surprises on inflation for the UK, Canada, Japan's CPIs. But it's important to note that these figures are not entirely indicative of future trends on the US market, but internationally, globally, things are getting so this is coupled, all these inflation concerns are coupled with the geopolitical risk, which are impacting significantly into the outlook. The ongoing war in Ukraine was exacerbated by the attacks on ATA-CML's missiles, Russia's updated nuclear doctrine, introducing considerable concerns about possible nuclear war, and also all this is affecting all indices, Nasdaq, S&P 500, Russell. Also, Iran's nuclear program adds another layer of complexity. So we have positive signals basically in PMI Flash for the services, but negative signals encompasses inflation, geopolitical risk, potential Trump positive policies, Putin's nuclear doctrine, Ukraine conflict escalation, Iran's nuclear program. I mean, what is the economy doing? What are the banks doing? Maybe the banks are doing well. Well, US bank deposits showed a slight decrease in banks' deposits, raising concerns about financial stability. So we have a lot of things that are not performing as expected. This is a mixed picture for the US and global markets. Severe economic indicators point towards continued growth. Significant uncertainties persist. So, Trump presidency, policy implications, geopolitical concerns. I mean, it's obviously that all this is affecting the market, and also the Fed's comments suggest a cautious approach to rate cuts. And we can see that in how the markets are now pricing in the cuts. You can see there are cuts for the December, 25 basis points, but then we have all these, you have January, March, and May of next year just holding rates. This is exactly showing why all this news, why the market is concerned. Higher rates are going to be there for a little bit longer than expected. Now let's move into the charts to really see how all these affected the market. This is the Nasdaq, the NQ weekly chart. We had a modest 1.74% increase, but last week was quite a pullback. It was at 3.47, and as you can see, we tried to hold, but then we flashed and we destroyed the Trump rally. So what are we doing? What are the candles showing to us this week? It's certainly noticeable that we have a daily still in place, a daily inverse fair value gap. It is also noticeable all these weeks on the daily. So people are buying the dip, but I think these are not strong buyers, and we might be seeing some kind of bounce and then a big push down, expecting this inverse fair value gap into all this liquidity that is down here. This is my forecast on the higher time frames, so be really careful because I think we might be generating liquidity, sell side liquidity here, and if these buyers are not holding hands, are weak hands, are not big money pockets that will defend their positions, they are going to puke and we are going to see 20,000 most probably. That's my main level to watch. And then at 20,000, we might see. But this is the overall levels that I see. This week has been super difficult to trade. We have also here a daily volume imbalance that was not even checked. But the main issue, the daily inverse fair value gap, it's my key to really see. The daily bullies was holding the level, but not the strong consequent encroachment. So I'm going to keep this, but last week low was tested and we bounced. But be really careful because as you can see in the chart, we have sell side liquidity down here. So that's my main concern. I think this liquidity, taking advantage of the negative news, this liquidity is going to be tackled. So how all the Magnificent Seven performed this week? Well, basically as the Nasdaq, very choppy, it's slowly grind, but not huge moves. Apple is there trying to hold. Microsoft is chopping around. Tesla, because of Trump, it's pushing quite a lot. It's holding their gains 32% since Trump became president. Amazon, it's pulling back a lot because consumer discretionary is feeling the pressure. Google, and Google it's dealing with its Chrome separation. There's a lot of news and bad news for long-term investors in this, and it's noticeable the pullback. Nvidia, our queen, it's just trying to hold, kind of doing, but it's weak, and Meta also. So we can understand why the Nasdaq was so weak and choppy this week. The Russell was trying to push higher because the environment will go to lower rates at some point, and I think people is betting on these small caps. But let me show you the RSP because we have also the same kind of behavior, but it's not as we had on the Trump rally. It's noticeable, kind of momentum trend and long-term moves, and the stocks that are above the 200 daily moving average are again above 60. But let's see what happens. I think the overall market, overall breadth is good, but I think our main issue is on the technology side. We need to really sustain the gains, and there are a lot of financial sector, despite the US bank deposits are still holding. We have a huge gap on Trump rally, and the banks are. We will see. The banks really need to hold these all-time highs if we are going to convince the market that the economy. Finally, the dollar, what it's doing, it's continually ripping. Dollar ripping, it's a pressure, a downside pressure for all the stocks and indices. And we are now taking liquidity. The dollar index is at 107, quite a big push. We have also yields in the 2-year yield pushing since Trump rally, because obviously rates are going to be higher for longer. The 10-year also. I mean, it's quite difficult to provide a final forecast, and but the overall sentiment, the breadth, other markets are converging to the same kind of outlook. The outlook is not certain. We have a lot of concerns on a lot of sides on the economy, geopolitical pressures, and in terms of technicals, let me tell you again, be careful with these potential big downside liquidity taken below 20,000. Because if I was an investor, I would like to see Nasdaq lower. I don't feel like putting more money into the long term if under these circumstances, under this context that we mentioned, I don't see investors are going to get at these levels. I think certainly below 20,000 and even below 19,500, there will be a lot of people willing to put some money again in the market. And maybe at that point, the conditions, the overall sentiment has improved. News have improved, and it's just like that. We have to really be patient to see what is happening. We have a big change with Trump. Their policies are still being analyzed and reviewed to really see the full picture, the full impact on this. That's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel, because I upload this weekly recap every week on Saturdays, going through everything you may be interested. And please support the channel, because I put a lot of effort in these videos. So thank you for the support. Remember that we are entering into a weekend. Remember to really slow down, take some time to rest, and analyze the market. Have my video as a reference, but do your own diligence and do your own charting, and you will be successful for sure. But remember also, discipline, patience, risk management are more than ever key for your success. Stay safe, everyone, and see you tomorrow.